Alrighty, everyone. Welcome to After the Close. My name is Barbara Armstrong. I'm a coach with Schwab and delighted that so many of you are here helping bring this class to life by joining us live today. And today was for many kind of a discouraging day in the markets. There's been a lot of whipsawing with tech stocks that have been really, really bullish, and stocks like Tesla that are currently, to use a highly technical term, getting the stuffing kind of knocked out of them. There's been a lot of volatility in the market. There's been a lot of talk about tariffs and trade and how that's impacting the stock market and might continue to impact the stock market. Not stock market, stock market. So today I wanted to talk about how do we navigate managing a portfolio. And today I wanted to focus on income. So ways that we might generate income through investing in one, dividend stocks, and two, short-term bearish trading strategies. So we're going to look at both stocks that we think might continue to, or that are giving us indications that they're going to continue to be bullish. And then we're going to look at some stocks that are giving us indications that they may continue to get the stuffing knocked out of them. And so that's what's on the menu for today. And we're looking at this from the perspective of someone who maybe has a full-time job that can't look at the markets on during the trading day, or they have a busy household. They're sitting down at maybe 9 o'clock at night, and they're trying to make decisions on how to invest when they aren't looking at the markets all day long. And I know that some of you, like Scott and Mr. AP 514 and Sharon and BJ and many others, you guys are looking at the markets during the day, but there are many who don't have that luxury, so to speak. So that's what we're talking about. Somebody saying, yeah, a lot of people getting their petunias frosted today. Yes, I was out for a team dinner last night and somebody said, what does that even mean? And it's like, I come from the north, like north of Toronto, and petunias are one of the first flowers to come out in the spring. And if you get a late frost, it'll kill your lovely little flowers. And sometimes, like, we have these great things going on in our portfolio, and then something comes along and it just kind of kills our joy, right? Frosts our petunias. So that's where that comes from. In any event, if you are not following me in the land of X, consider this your formal invitation. My handle, Barb Armstrong CS. Mike Fairborn is in the chat. He understands these strategies perhaps even better than I do, especially on the dividend investing side of things. So if you have questions, don't hesitate to ask. Mike is also posting a lot of great content on X, so you'll want to follow him there at Mike Fairborn CS. So let's get through our important information so we can get out to the platform quickly. While we look at technical analysis in this class, we do also look at other approaches, including fundamental analysis, looking at earnings, looking at news, things that can help us make a more informed decision. And so we don't recommend that you just look at the charts as your only means of investment research. We use the Paper Money software application on the Thinkorswim desktop, and I know that's a mouthful, but what this really means is that on Thinkorswim, you can sign into your live account, or you can sign into a pretend money account. And it's an awesome place to learn and hone your skills and make sure you understand what you're doing before you consider trading in your live account. We use stop loss orders frequently in this class, but know that they don't guarantee that you're going to get out at the price requested or even near it if the stock gaps down. And just because something has happened in the past doesn't guarantee that it's going to behave the same in the future, right? Right. Okay, so in this class, we're kind of taking a look at what's been going on in the markets. We're going to, discuss both fundamental and technical concepts, and then we're going to place some example trades. We're also going to review some of the current positions in our account. Okay, as we're starting to, in this particular class, we are pretending that we inherited $1 million. And how are we going to invest that over time? So today, when somebody said, a lot of, ugly moments in the market today, the S&P 500 down, 1.5%. When we look at the context of where it's been in the last year, and for those of you who are able to join Kevin Horner at the Market Open, he does a class several times a week, which is really dedicated to looking at the market and what's been going on. But we're seeing now, at one point it was over 20%, 21%. We hit a new market high just a week or so ago on the 19th of February. But we've had a pullback, and we're now at 15% on the year. So the overall longer term trend is still uptrending. But this last week, if you take your drawing tool and you come over here, down almost 5%, down 4.7%. And when we look at the NASDAQ, which is our tech heavy index with no financials as part of it, it's down 7.7. And so lots of knickers and a twist looking at their portfolio, because it doesn't feel good when you look at your portfolio and you see that things are down. And this has come down here, to a previous support level. It came down here on January 10th. And so, but these are big bearish candles. Okay. Yeah. And then when we look at volatility, we're seeing volatility up dramatically. Like if I draw a line, we'll get rid of this show prices percentage line. We draw a line here at about the 20 mark. It hasn't spent a lot of time above 20 in this last year, has it? And today, along with the big drop, and that this tends to make sense. When markets are falling, volatility tends to go up. Okay. And so that can provide opportunities. Okay. Okay. Now, what about the sectors? And I'm just going over this super quick, but in the last 4 weeks, staples is all of a sudden, looking pretty good. And it had gone through some tough times here. We have a bit of a double bottom type pattern happening, or a deep V, and then it broke out above and came back and retested. Looks like it's retesting again. So staples kind of rolling into favor. Real estate on an upswing, and utilities. So, utilities, even though utilities fell today, we tend to see staples and utilities kind of running closer together quite often. And it's because these are stocks that tend to be in favor or come into favor when when people are looking for stability. They're saying, I've made a lot of money in some of, the Mag 7 stocks and some of these high flying tech stocks. And I'm afraid that, the stuffing hasn't been completely knocked out of some of these yet. Now, Tesla could turn around tomorrow. But we're seeing kind of this, what we call from a technical perspective, a bear flag, and it's still falling. So, would we be, unsurprised to see it rally for a few days, even if the downtrend continues? Well, it could. But, this is quite a fall from grace. It hit this high of 488, said down 40%. Whoa. Now that's an ouch. We're not talking a single Band-Aid to fix that wound, right? Somebody's saying, yeah, the bears are coming out of hibernation, but is this the case everywhere? And if we come and we look at our Market Watch tab and we look at the S&P 500, so, here's our tech sector. Well, actually, here's our tech sector. It's almost half. Let me just bring up my drawing tool. And I know many of you are familiar with this. Oh, sorry. Here's our tech sector. And lot of red in tech today, right? A lot of red in communications. And these sectors were for a while, the golden children, right? And where are we seeing more green? Well, when we look here at financials, a lot of green on the screen and a lot more green on the screen in staples, right? Healthcare is kind of a mixed bag. The other thing we can do here is we can come out and say, so I'm going to close my drawing tool, close this. We can come and visualize to index watch and then put the S&P in here. We can see that, 60% of stocks, well, 63% of stocks were down today. That means 37% were up. But, what really drove the market is that the ones that were down, we had a lot that were down big. First Solar down 10%, Monolithic Power down 9%, Moderna down 7%. And you can just hover over them. eBay took a hit. It was down 8% today. Constellation Energy down 7%, Axon, and so forth. So what we want to look at is first, are there some areas of strength? And one of the stocks I thought looked interesting was Kimberly-Clark. So Kimberly-Clark, this is just a 1-year chart. So it went up from 120 to 150, nice uptrend. And this is where having a trading plan when you own a stock can be really helpful. And I just posted this week, in fact, it was posted, I think, on Monday, an example trading plan for a stock. And you can access that. If you haven't subscribed to the channel, you'll want to subscribe to Trader Talks from Schwab Coaching. And I'm just going to bring this up for a second, just so you know where to find it. So when you come to playlists and come down to these trade management mini sessions, here's an example. It's right at the top of the, example trading plans. So this one is for stock investing. And it's the basic idea, and this is pretty basic, and there are some parameters in, do you want the sector to be uptrending and et cetera, et cetera. But if we had owned this stock, the idea might be that if it closed below the 30-day moving average, the day of this low, you might move your stop up to 3%, or depending on how volatile the stock is, maybe 5% below the low of that day. And so we probably would have ended up out of that stock on this day on earnings, and then stayed out of it, for a short period of time. But might we be interested in getting back in now? And we might. And what might be appealing? Well, if we come to the trade tab, we say, well, it trades more than 1 million shares a day. So it's fairly heavily traded. It pays a dividend of 3.6%. So if we're looking for a way to generate income in our account, through an investment, could this be one idea? And then if we're looking for a value stock, there are some that would say that a stock that has a price earnings ratio of under 19 would be helpful also. And then if we come to the Analyze tab, we can see this is part of the staples sector. And if we scroll down, we can have just a quick look at some of the fundamentals. So earnings per share last year between 2023 and 2024 went up by 31%, from 521 to 755, even though sales stayed relatively flat. And return on equity went up, return on assets went up, their gross profit margin went up. And then when we come down here and we look at the dividend payout per share as a percentage of earnings per share, it's at 64, which means, are they likely to be able to continue to pay a dividend? And you know, the answer to that, and it depends on how you interpret it. You know, I've seen this number sometimes at 90, which means like all the money they're making, they're, you know, a lot of it they're paying out in a dividend, because there's no guarantee that dividends will continue to be paid. But you can go out and do a query online and say, is this stock a dividend aristocrat? And in fact, it's not only a dividend aristocrat, it's a dividend king. And what's a dividend aristocrat? Well, a dividend aristocrat, to get into this club, and there are currently, I believe, 67 or 68 companies that qualify out of the S&P 500, you know, where we have 500 stocks. Sometimes it's, you know, there are 2 listings for a stock. So there could be 501 or 2, but out of those 500 stocks listed on the S&P, there are 67 or 68, depending on who you ask, that qualify as a dividend aristocrat. And what does this mean? They're part of the S&P 500, and they've paid a dividend for 25 years plus that has increased every year. So they have not only paid a dividend for 25 years, they have also increased that dividend every year. And to be a dividend, so this is a dividend aristocrat, to be a dividend king, you got to make that 50 years. And Kimberly-Clark, you know, they're in both clubs. Okay. And so that's not a guarantee, because Triple M, I know they were at least a dividend aristocrat. I'm not sure if they were a dividend king, and it must have been a very difficult decision for them to make, to cut their dividend. And they did. And so, you know, now it'll take them 25 years to get back in the club. You know, and does it mean we should never look at that stock again? Well, no, they made a financial decision that they had to make, but it means they're not in this club. So, but when we look at this and somebody's saying it's kind of like a reverse handle, and that you kind of have the cup before the handle. Yes. And, you know, and some might just say, well, I see this as a V pattern where it's breaking out, and it's kind of flirting with this resistance level around the 140 mark. And, you know, and if we're okay with that, we could say, you know, we're okay. We want some of our investments to be longer term. We can see that a dividend is coming up. So if we wanted to buy shares, where might we put an exit? Well, we might say, you know what, like I'm feeling a little nervous about the markets. And so, you know, I'm going to take today's low and go, you know, we could say 5% below that number. So we're risking about 5%. So our low for this day was 138.39. And if I multiply that times 0.95 to give it a little room to move, 138.39 times 0.95, just to use something different, our stop would be down here. And, you know, if it comes all the way down here, you might say, well, then, you know, that's further than I want to take it. Now, what's the advantage of a stop that's further down is that you're less likely to be stopped out. You might say, hey, if this doesn't continue to go up, I'd rather get out sooner. So I'd rather put my stop 2% below. So that would be 138.39 times 0.98 at 135.62. You know, and that would be kind of here in this range. You know, if we wanted to draw a line there, we could. And so, you know, it's up to the individual investor. So in this example, because we're talking about being nervous about the market, let's go with the higher stop at 135.62. And we don't want to risk more than let's look at our scratch pad here. So $3,300, that's a third of 1% of the $1 million we started with. And our max position size is 50,000. So if we bring up our calculator and we say, okay, if we have 50,000 that we could put into this position and we divide it by the current price of 140, how many shares could we buy? About 350. Okay, so if we say, okay, we can buy 350 shares, maybe make it 300 so it makes it tidy if we want to sell a protective put or sell a covered call on this, which we could do. And if we are putting our stop at, so let's erase this, at 135.62, and we're getting in at around that 140 mark, what are we risking? $4.38 a share-ish, because the markets are now closed. And if we multiply that by 300, that's about 1,300. So that's well below our 3,300. And so we're going to come to the trade tab. We are going to right click. And you'll notice here that in the after hours, here's our bid, 133. In other words, if you want to sell it, that's what we'll pay you for it. And here's our ask at 141. And the market makers have to put something in here, but often we'll see the bid-ask spread will be really wide in the after hours. And this is why some investors choose not to place. They don't want their trade to fill in the after hours. They just want to place their trade at night when the kids are in bed and life is calm. And then all they have to do is check in the morning to make sure that it got filled. And so we want to come in here and buy custom with a stop. How long do we want to own this? Until it stops going up. And how do we define that? Well, I think we've talked about that in other classes, but we can have a conversation about that. When we look at our trade maintenance, and we're going to put our stop here at 135.62. Uh, 140.19. So this is saying we'd be willing to pay up to 141, but we don't want to pay any more than that. And this order will either fill tomorrow or it won't. Or you might say, well, I want that number to be 140.50. You can make it whatever you want. Okay. So we're going to tee that up and we're going to put that in our dividend stock group. And again, just because we have a stop in doesn't mean we're guaranteed that we would get out at that price. Okay. So we've set that up. Now, when we come to the monitor tab, we can see that we have a number of positions here. And beside KMB, we have two little chiclets. And that's one to get us in. And once we get in, one to get us out. We have a trade on AT&T. So we own shares of AT&T. It pays a dividend of almost 5%. We have a $27,000 position, and we're up about 13% on that one. On Verizon, we're up about 5%. This one pays a dividend of 6.7%. And, we have a $30,000 position on that. Now, I always get nervous when I see no little chiclet here. It means we don't have a stop loss order. So what's going on with American Electric? Oh, last week we bought the shares and we bought a protective put that covers us until March 21st. And if we wanted, we could add days back in here so that we see how many days till that expires, that protective put. We had taken that out because with a stock, stocks don't expire, right? So we have coverage for another 3 weeks. And how about Altria, which we put on last week? We have a protective put that lasts until March 21st on that one as well. Yes, and AP 514 is right. We call that a married put because we married the put to the buying of the stock. We put them both on at the same time. If we add the protective put later, we call that just a plain protective put. No marriage, no ring involved. Yeah. So that's what we did with those. So we're covered. Now, what happened with Albemarle? Well, so last week we talked about some dividend stocks like we are this week. And with Albemarle, we said, okay, this looks like it's been trading in this big fat range. And it came up here and had bonked its head on this 30-day moving average and looked like it might continue to the downside. And so we put a swing target in here. But today we had what we call a bullish engulfing pattern, which is not what we want to see on a bearish trade, my friends. And so we made a little bit of money. We were up $1,000, and we gave a third of it back today. So maybe we just kind of take the money and run. And so, I like to run a semi-democratic class here. We have over 100 people. So let's just do a little survey, a little poll. ALB, take our profits. Or do you want to stick it out and say, nah, I want to stay because I still think this could come down. And so you guys vote and we'll put, we'll either leave it alone or we can put an order in and say, let's take that unrealized gain and put it in the realized gain bucket. Okay. Now, we don't have a ton of positions in this account. We have 2 others. So we have 3 others, Cisco, Fox, and for some reason we have 100 shares of GoDaddy and no exit. So when we look at Cisco and Fox, we're up on Fox, down on Cisco. Let's have a look. I think Cisco just got filled today. So we had put a conditional order in on Cisco, and we did that on, you can't really see it because I made it purple. So last week we put in a conditional order because we said this stock has really been uptrending. And so, if it starts to uptrend again and trades above this high by a certain amount, get us in. Well, it goes up, nicks our order fills, and we get in, and then the darn thing pulled back by the end of the day. Wouldn't that just frost your socks? So we're now in this, and this is down, but we just got in this today. And we do have an exit in place. And so we're just going to kind of hang tight with that one. And then Fox. So sometimes these things don't work out kind of as you had hoped they would, right? Yeah. Like one of the things, we want to manage what we have and make sure that we aren't snatching defeat from the jaws of victory. So here is Fox, and this is a growth stock. And we're saying, like, we just like to stay in this as long as it continues to uptrend. It's not, a short-term trade with a target. And so far, like, this could be setting up a bit of a bull flag, but it's still way above the 30. This is a 30-day moving average. And is, even though we've had a little bit of pullback the last couple of days, it's still looking strong. So we're going to leave that. Now, I went back, and what happened with GoDaddy is that we had somehow ended up buying 200 shares on this day, and there was just an exit for 100 of them, and then we didn't end up out. And now We have, even though this, I think I went and looked at the news on GoDaddy, and here on the 14th, earnings was the 13th. B. Riley raised the price target to 225. Benchmark raised the price target to 275. Like, and it reacted by doing what? By falling and continuing to fall. And then it looked like it was going to recover. And then what do we have on this day? If you're not familiar with candlestick patterns, I did a class on that in the Getting Started with Technical Analysis. This is called a bearish engulfing. And when we look at it in the context of not just those last 2 days, but the shorter term trend, this thing kind of fell off a cliff, broke through this support level and this support level, rallied for 3 days, and looks like it might be continuing to fall. And so this is an error in not making sure that you had exits in place when you can make a decision unemotionally. And so when we look at this, does this mean the stock is dead to us? No. But right now, this configuration is an indication that it may not have finished falling. And so we may say, you know what, better to admit when we were wrong quickly than hang in there forever, and, here's what hanging in forever can look like. And I'm just going to go back to, here's a 5-year chart. So Peloton, when everybody was incarcerated during COVID, this stock absolutely took off, went up to $170 a share. And if you start trading on hope in that, like, hey, I like these bikes, they're a good product, this stock will come back. It came all the way down to 270 and is currently still trading under $10 a share. And are there not many times along the way, if one owned this, that in hindsight, you wish you had sold? Yeah. And so we're going to come up to GoDaddy and say, GoDaddy, get thee gone. Because we don't want to lose more than 3,300 on any one position. We're down 32. So we are going to create a closing order to just sell. And it closed at 174.94. So we're going to make that our sell price. And then in the morning, it'll just take a couple of minutes once the market closes, or once the market opens, to make sure that this has filled. Okay. And by the way, let's say, you're doing this at 9 o'clock at night, and then the next morning you're in your office and you just want to be able to look at a couple of trades very quickly. And you don't want to risk anybody seeing your $1 million account. You can just click on this option buying power and privacy. And then nobody can see any numbers. Yeah, and GoDaddy was added to the S&P 500 last June. And so any index or ETF that tracks the S&P 500 would have been adding GoDaddy to their portfolio. And that's when we bought it in our trading a smaller account class, was last June. And of course it got, I reset the account. So, and we were up 40 or 50% in that stock, but that was last year. And so you just have to, move on. And here we're moving on. So the first trade we made some money on. The first 100 shares, the second 100, we lost everything we made and then some. Okay, so we looked at that dividend aristocrat. Let's go look at one that was a dividend aristocrat. Okay, so that's 3M. And so here's a stock that in the last year has gone from 75 up to 155. Well, that's 100% increase. gapped up on 2 of the 4 earnings, well, gapped up actually on 1, 2, 3 of the 4 earnings. And when we look at, the trajectory, could we call this kind of an elongated bull flag? And when we come in and look at this, because I seem to have my candlestick pattern hat on this week, so feel free to chime in the chat. But this pattern that we saw here, what do we call this? There is a name for it. And then we had another one here, pattern here. Anybody got a guess? This 3 candle pattern, we call that a morning star pattern. And then we had, a bullish engulfing pattern. But this pattern on its own, where you have a big down day, and then, you've got this candle of indecision or some type of harami type pattern. And then, on the third day, actually, this isn't quite technically a perfect morning star in that you really want the third candle to close at least halfway above the body of the red candle. But it did that yesterday, and then today it's continued to move up. And this would be considered a bullish harami, where this candle engulfed the candle of the previous day. Yeah, you guys are right, morning star. And 90% of you, by the way, voted to take the money on our bearish trade. So, and this, even though the dividend was cut, and there's no guarantee it'll continue, it does pay a dividend of almost 2%, has a price earnings ratio of around 20. And might we want to, include this in our portfolio? And we could say, okay, well, what was the low on this day? 141.76. So if we went 3% below, and I'm not suggesting that you change the percentage every time you place a trade. I'm just suggesting, that you have a percentage, and probably stick with it and track it, and then kind of see where you end up with the thing. So our stop would be, if it was 3% below that, around the 137.50 mark. So if we're risking $13 a share and we don't want to risk more than 3,300, we could buy about 250 shares. And so if we say, well, let's buy 200 shares, and does this have premium? So could we do this as a buy right covered call, and say, hey, this previous high was 155. Instead of treating it like a swing trade, could we sell a covered call on this? We have 8,000 contracts, and say, if it closes at 155, we're willing to sell it and make a little money. And so if we're buying our covered stock, then the most we can make is about $6.54 per share. Because if it goes up through 155, we would be called out. And if we're saying, well, that's our goal, so 155 minus the 148.44, $6.56. You may say, well, that's fly me to Tahiti, but could go into your Disneyland fund or your Tahiti fund. It would represent a 4.4% return if the trade worked out. Now, to the downside, we could lose, about $700, if our stop is at that 137.50. So, but we're not risking 1,300, because the covered call, that we're making a little money on. So we're going to put this in as a day order for tomorrow. We're going to do not 10 contracts. We're going to do 2. And then we're going to put our stop in. And because we have to buy back the call we're selling before we can sell the stock, we're going to make this a market order that's good till canceled. And we want to get out if the stock goes at or below 137.50. Now, I had this whole series of bearish swing trades that we were going to do as well, but time tends to fly, doesn't it? So we're going to put this in our buy right bucket, which means we're buying it with the intention, if all goes according to plan, of the stock trading above 155 by March 21st and being called out. Now, if it doesn't, what could we do? Well, we could sell another covered call. If it gets close to that 155, and let's say it's the 19th of March, we might buy that call back and we could sell another one. So we'll discuss our choices as we go through. Okay, and we're going to come back to our monitor tab, and with Albemarle, we're going to come up here and just cancel this OCO group altogether. And then we're going to come back down to our position and say, we just want to create a closing order to sell. And the current price on that is about 480. So we just like to put in an order for that to sell. And tomorrow, if it gaps down, we could end up out at a higher price. If it gaps up, we could end up out at a lower price. We can review that next week. Now, if you wanted to practice some additional bearish trades, now that we've closed that one, could we do something with Biogen, where this has been downtrending using the 30-day moving average as a ceiling or a resistance level? And did it not come up and, looks like it might be moving to the downside again? And where might you put a target? Well, you could go down to this 128.50 level, but we could also maybe just come down to around the 130. It's sitting at 139 right now. And how would we do that if we buy a put? We just say, okay, I'm going to buy the put. Okay, I'm sneaking in one last trade here. We're going to come out to April. We're going to buy this put, and we're going to look at this in the morning, because here's our 140 put at 680. We can risk about $3,000. So we could do 4 contracts and we'd still be under. We're going to buy custom with an OCO bracket, and we're going to say, hey, when this gets down to, what's our number, 130. So if and when this comes down to 130, we want to exit and take our money. Cue Steve Miller, take the money and run. Or if this option loses half its value, we want to exit because it's not going in the right direction or not getting there fast enough. So we're going to make this 350. And this is, a more typical swing type trade. And so this is going in our long put, and we're going to call this a swing trade. And again, just because we have a target and an exit doesn't guarantee that we're going to get out at exactly that price. Okay, so what did we do today? Just to wrap things up, we looked at, or teed up 3 trades. One on Biogen, which was a bearish income generating trade, short-term trade, swinging to the downside is our expectation. We did another income generating trade where we bought 3M. with the goal of being called out because we sold a covered call at the 155 strike on March 21st. And our third attempt at an income generating strategy was to buy some shares of Kimberly Clark, which is a dividend aristocrat and a dividend king, and which currently pays a dividend. So that was what we set up for today. I appreciate you joining me. Here's my ask as we wrap things up. I talked about subscribing to the channel. You'll want to subscribe to Trader Talks from Schwab Coaching. You'll want to follow Mike and I on X, Barbara Armstrong CS and Mike Fairborn CS. And if you could do me a favor and hit the like button, it helps move this up in the algorithm so that more people can find this content. So I appreciate you sticking around for after the close. This is the end of our live webcast day. We start first thing tomorrow. James Boyd will be doing Trader Talks tomorrow. And then I am teaching at high noon tomorrow, trading a smaller account. I know many of you will be joining me there. And then Mike Fairborn has a class on scripting, which if you haven't gone to that class, you're going to want to check that out. So thanks, guys. Have a great rest of your day. We'll see you in a webcast coming up soon. Bye for now.